Bismillahirrahmanirrahim. Assalamu alaikum and hi. This is your YouTube channel, The Perfectionist, where we will be discussing about business, related subjects, topics, and of course fields. In this video, we will be discussing about the principles of financial accounting, the very basic knowledge about the accounting. Wait, before moving forward, do you know that the accounting field is rife with misconceptions? Yes, many of the students and learners complain that accounting is hard and boring. The demanding nature of the subject leads many becoming accountants to ask themselves, why is accounting difficult? Of course, there is no easy specialization anywhere, especially in colleges and universities. One must work for it. But what if you enjoy accounting? So, here is Perfectionist with the tagline, Easy Log, Problem Solved, where in a very simple and organized way you will learn all about business, and in this video about accounting. In this video, you will learn about what accounting actually is, what is its role in making information decisions, business goals and activities, and the users of accounting. Let's start. Accounting. Accounting is basically an information system. So, what an information system do? Information system basically get the raw information or raw data and make it useful for the decision makers so that they can provide the correct knowledge and decision making within an organization. So it is an information system that measure, process, convert the raw material into a very refined form and then communicate financial information about an economic entity or a business. So, what the classical definition has to say about accounting is an art of recording. For example, you are in an interview and the interviewer asks you, what is accounting? And you are like, it was a very huge definition, I don't remember. So you need to remember, basically the accounting is an art of recording and everything flows around it. Classifying is basically differentiating and creating different heads of the information that could be related to classification of expenses, classification of fees, and so on. And then summarizing means converting the information into very refined form in a very precise report that could be reported to the financial decision makers. Let's move towards accounting process. As you can see, there are three different heads: business activities, accounting, and decision making. These three heads are interlinked and the process flows through these heads. Business activities are operating activities which are necessary for a business to operate. It can be getting investment and then purchasing the product and services and then making the organization run. And accounting is basically recording, means getting the information from the operating section, means business activity, and then processing it and then making it refined form to be communicated to the financial decision makers. and then so that they can make a decision regarding the business operations. So, business goals and activities. There are two basic business goals of any organization, and they are interlinked with each other. These are profitability and liquidity. Profitability is basically related to the profits a company earns that are very crucial for a company or any business to run the business. For example, you own a land in Barrigatown, and then after a year you wanted to check the worth of the plot, and you came to know that the plot that you bought for 80 lakh is now of 10 billion. So now you mean that you have earned a 20% profit. And liquidity. Liquidity is related to cash. How quickly a thing is converted to cash. So, business activities. There are basic three types of business activities: financing activity, operating activity, and investing activity. Financing activity. The financing activity of any business activity is arranging money, funds for business, either from inside or outside. What do we mean by inside? Inside mean from the owners, from shareholders, and outside mean from the creditors in a form of debt, so that we will be paying it afterward. Then operating. Operating section include cost effect of the transaction, then enter into the determination of net income, such as cost from sales of goods or cash paid to the employees and managers, or buying and producing goods and services and paying taxes. Means the things which are necessary for an organization to operate. And then the investment decision. The investment decision is linked to purchasing of resources that are potential to generate profit. For example, you're running a university and chairs are your investing decision. Means more chairs, more students, and more fees, and at the end more profit. Types of accounting. There are two types of accounting: financial accounting and management accounting. Financial accounting. It is a process in which a financial data in a form of summarized report is presented to the external interested parties, the decision makers. That could be investors or creditors. Means they want to know whether to invest or not to invest. The purpose of these is to calculate profit and loss and then exhibit the financial position of a business. The reports are called as financial statements. It is also referred as general purpose accounting. Then management accounting. Management of any company refers to the people who are responsible for operating a business, meeting its goals for profitability and liquidity. It is a process in which a financial and non-financial data in the form of reports are presented to internal interested parties, means the management and employees. It shows the monetary and quality of a product produced in a company or a business. This enables management to take decisions on the basis of reports. This provides the information to the management about operating, investing, and financing activities. Management accounting is used for decision-making purposes. Decision makers. The users of the financial accounting information are management, those who have direct interest, and those who have indirect financial interests. Management have direct interest in a company or a business. There are different financial activities that a management do. Means the finance department, the operation and production department, marketing, HR department, and other departments of any company are the direct users of accounting information. Second, those who have direct interest are investors and creditors. Investors want to get the profits, so they are interested. Creditors want to get their money back and interest, so they are interested. Those who have indirect financial interest include tax authorities, regulatory agencies like Pakistan has Stock Exchange Commission of Pakistan, labor unions, customers, economic planners like State Bank of Pakistan. That's all for now. Watch next for continuation of the topics.